Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing some mixed markets around the world with green arrows in Europe and red ones in Asia. Scott, seems like as December develops, there just continues to be divergences.
I think the theme is mixed because every day it's kind of random where one country's up, or even in our markets, you have two weak sectors to two strong sectors. So it's really right place, right time if you're trying to be tactical. But overall, I do think that most of the world indices are digesting, taking the equity move in stride. So I don't see many warning signals yet that we might have a deeper type of a move.
You want to show us what you're looking at overseas then?
No, I'd rather get right into the chart of the SPX.
All right, well, good, because our futures are flattish this morning. You know, would you have thought that we would be responding better to the budget deal? Because, you know, we did have that downside action in some sectors yesterday.
I think that we're just getting numb to Washington. Yes, they have a budget deal, and it's great that they didn't cause any kind of calamity in headlines. But last time they were talking about devastation, and then nothing happened, and we wound up rallying. So with that being said, you know, you look at the chart of the SPX, and you will see that, you know, same type of trend. This is your macro trend in stride. We go to the more intermediate area that we've been watching. This was when we were, you know, you had that reversal at October 9th. We've had a nice move since. You know, if you want to follow an upper trend, this is the upper trend that held in right here. And as of now, we're just kind of going sideways. So I would say here's the 8-day. That's what some shorter term guys are watching, around 1801. But I wouldn't get shorts on the brain unless we maybe had to close below 1790. Below 1790 in the coming week, perhaps then we get a bigger corrective type move. But overall right now, I think things look really good.
Well, we have some retail stocks on the radar after several names perked up a bit yesterday. Let's talk Coors first, which has been a pretty solid name to go to.
Oh, ever since the IPO, if you were a stock picker, you know, you put it in the drawer, you're doing great. You want to try and time it. This is potentially one of those times. You look at the chart of Coors, you will see that it's trying to perk up. It's trying to break above this descending channel here. So if this were to get above, just say, 82.04, it could take out the highs. And then real quickly, let's just look at Under Armour. Same type of thing. Great new issue way back when. Starting to perk up. This thing's got to get above, just say 83.25, and that can give you a nice tactical trade.
But on the flip side, if we take a look at some mass market retail names, we have Costco. Actually, bad news there, down about $3 this morning.
Yeah, these major mainstream retailers have not been acting well. You look at Costco, you look at the chart, you will see that it did have like a breakout failure right here. So here is your upper level stop. And then it just continued to get weaker. You know, it broke this small trend line right there, and it closed on the dead lows yesterday. It is opening right around the, what is this, the 100-day, which could be some support. So if you haven't sold Costco yet, I don't think you just come in and sell it. I think if you're not involved, maybe right around this 117-ish, you know, the 100-day, see if it actually opens on the lows and trades off it for some type of opportunity.
Well, great day in social media yesterday. If you remember in yesterday's morning call, Scott and I talked about Twitter and Facebook in the race to 50, and they both got there in their own way.
They did. Yeah, they had the tortoise in the hare. I was having fun with that. Twitter off the bat, bam, right through 50, went as high as 52. You look at the chart. You know, if you went with it fast, congratulations. This is when we talked about it over a week ago, around 42. Another buy area, and then there you go. Today it's opening up a little bit. You know, I wouldn't chase this up open, to be honest. So, you know, if you didn't buy it here or here, don't be buying it up here around 52.5. You know, if it were to trade back below 52, 58, maybe you short a little bit versus the high just for a tactical trade. You know, but otherwise wait for a new setup. You know, Facebook was one that I stayed with because it wasn't as extended. Here is that red dog reversal at 44.04. Sideways action and up, sideways action and up. And do the same thing with this pivot. Yes, as high as 50.77. If it gets above it, it could continue. If it doesn't, you know, just use this last previous level as a level to trade against, which is around 49.40.
Now, shifting the focus to some Chinese names, Baidu finally got that explosive move that you were looking for.
Yes, and I didn't make as much as I would have liked to, but at least I made some money back that I lost last week trying it. This stock has been unbelievable for over the past 3 months. You look at the breakout here, wasn't ready in this little area. These two bars got me good, but then woke up 2 days ago. Then yesterday was explosive. So with that being said, you have another stock in the sector, Sina, which is pretty much considered the Twitter of China. They might roll out their IPO sooner. Here's what you call a day one. Engulfed a lot of the moving averages. It was a really big day, so it might not just continue right away, but I would say the longer it holds above 80, the higher the probability you get another trade through yesterday's high here of about 82.
Yeah, almost a 7% gain there. Not too shabby. How about over in high beta? Apple out of play, but held up well as Google made a new all-time high, which I said before, it feels like we say that every day almost.
Yeah, seriously. So Google's been great for anyone on any time frame. That earnings gap was powerful. If you take a quick look at Google, just to talk about what you could have seen, here was all you needed to know. Look at the size of this earnings gap that held. Very powerful. Then you had this descending channel here, another break to the upside, and then now look where we are. Talked about the road to 1100 here, I think, right on this breakout, and it seems like it could happen. I wouldn't be chasing it here now. You had more calculated points along the way, but if you're investing in this in the long term, it's giving you no flashing, warning signs to get out of the way, and if you're short term, keep with it as long as it stays above the 8-day moving average.
All right, and let's talk to the gold bugs. Gold and the miners gapped up yesterday, down a little bit today. Do you expect them to hang in there?
Well, yesterday I came in long GDX and it helped with the down futures. Gold wound up opening up, so did GDX. I sold mine just because I wanted the day-and-a-half trade. You look at the GLD to see, what kind of move you could have here, and it's been trapped in this, all these macro downtrends. So for this little one to get a bit of a counter trend trade makes a little sense. In order for the bugs to keep some commitment to this move, I would suggest that you would probably want to see it hold at least this area. It's already below 121.47. This high here is 120.76. So anywhere above, just say 120.50, I think it would be a win for the bugs to hold it in there. As far as the GDX, I would say same type of thing. This is such a small little move, but it was up 4 or 5%. So tactically, it was great yesterday. So for this, hopefully it holds for these guys 21 for potential of further movement.
All right, and that's your morning call for this Wednesday. Happy trading. Have a great day.